Hello and welcome to today's Rystad Energy webinar. My name is David White and I'm a part of the sales and marketing team. And today I have with me Thomas Lyles, an analyst here at Rystad Energy. Our webinars run as part of our free industry insights around E&P, oilfield services, shale and the Norwegian continental shelf. We offer various industry newsletters as well as information sessions, webinars and similar types of events which we invite you to sign up to if you haven't already done so. So keep an eye in your inbox or visit our webpage for upcoming events and for newsletter sign up. Today, Thomas will be giving an overview of our E&P solutions. We will now commence with the presentation. On your webinar window, you will find a chat box where you're welcome to raise any questions you may have during or after the course of the webinar. The presentation will last approximately 25 minutes, and with that, I hand you over to Thomas.
Yes, thank you, David. And today, as David mentioned, I'll give an overview of some of the products we offer as part of our global E&P solution. And the main topic for this webinar will be UCube on the one hand, as well as the UCube economic model, which is a relatively new feature that we've introduced this year as part of our UCube Premium subscription. So just a quick overview of our E&P solutions. This is one of 4 upstream product suites that Rystad Energy uses to offer industry insight. And the E&P solution specifically consists of 3 separate parts. UCube, which I'll go into in more detail, of course. This is our main upstream database. And we also offer more specialized databases such as eCube, which covers exploration on a well-by-well basis and license-by-license basis globally, as well as the Oil Market Trends Report, which is released monthly and provides monthly supply and demand analysis for global oil markets. So UCube is really at the core of much of what we do here at Rystad Energy. Just to give you a quick outline, UCube offers a complete overview of the global oil and gas industry on an asset-by-asset basis. So as part of this, we have over 65,000 unique oil and gas fields and licenses, as well as over 3,000 company portfolios. Historically, our production and economic profiles extend back to 1900, and forward-looking, they extend up to 2100. In addition to these unique asset and company portfolio selections, there's any number of ways you can split upstream supply picture, whether it's by different life cycle categories, so you can see what's producing, what's under development, and what's been discovered, and when we see that coming online. You can also view the supply picture by segment, so see all the different kinds of conventional, offshore, and unconventional categories, and much, much more. So these are just a few examples of how you can slice and dice the supply data. On the economic side, our 4 big metrics consist of capital spending, operating expenses, government take, and of course, free cash flow. All of these segments, these cost segments, are able to be broken down into much more granular detail. And finally, I would also add that UCube is a very good valuation tool. So our modeling provides net present value and break-even estimates on the asset and company level in a range of different oil price scenarios. So in addition to the micro and macro analysis and benchmarking you can do with UCube, it's a compelling business development tool for E&P players, both in terms of competitor intelligence strategy and market screening for acquisition opportunities. So what I'd like to do today is split this webinar into 2 parts. First, I'll focus on some of the main functionalities of UCube, both on a macro level, on a more specific asset level basis, and an operator level. And I will be using the U.S. shale oil industry for this purpose. Then further on into the presentation, I will give you a functional overview of our economic model and show you some of the extended functionalities that offers. So starting with the macro outlook, what I've provided here is U.S. light tight oil production. So this is essentially your crude oil and least condensate from unconventional tight or shale sources on the left here. And this is split by the 8 or so major LTO plays, which currently account for over 90% of LTO production in the U.S. and will most likely retain that approximate share going forward. So this supply scenario is shown here is consistent with our base case price assumption up to 2025. I mentioned earlier about the ease of segmenting different spending groups into more granular cost categories. And so what I've done here on the right is segment this high-level LTO spending for the same 8 plays by economics detail, both historically and to 2025. And what we see here isn't too surprising. If you look at this, the lion's share of the spending is going towards drilling and completion activity, but there's also some significant spending going into the associated facility capex, rig capex, and a certain amount of appraisal drilling that we assume every year. Now, if you want to get a little bit more detailed picture of a particular play or particular operators, you can easily do that. So drawing on this example, what I've done here is drilled down a little bit in more granular detail and showed you Eagle Ford LTO production historically into 2025. And this is split by about the top 12 operators who account for about 75 or 80% of total play level production, LTO production that is. So historically, in this specific case, what we can see on the supply side reflects the wider trend for this play. That is that production peaked in 2015, and we've since seen a year-on-year decline with the supply trough coming this year and an uptick in activity and production levels from 2018. In the economics example on the right, I've queried a little bit more extensive economics outlook for these operators in Eagle Ford. So this gives you not only the overview for capital spending, but it also provides an overview of the various operating cost components. So your transport costs, SG&A costs, production costs, so on and so forth, as well as your government take in the form of royalties, which we can see here makes up a pretty big share, but also other taxes, income tax coming in after 2020, after a lot of deferrals in earlier development years. And finally, we have free cash flow in green at the bottom. One functionality that I would also like to underline is this table view, which I think provides a really user-friendly way of viewing a wider range of value items. So if we stick with the Eagle Ford example, then let's say you want to get a number of asset level economics and resource and valuation metrics. So what I've done here is given you a breakdown of about the 10 or 11 top operators in Eagle Ford in terms of 2017 gross production. And this is further split down by those operators' assets. And for each asset, moving left to right, you'll of course see production as a value item, but you can also see asset level net present values, the break-even oil price, what we assume to be this year's drilling and completion capital per shale well, or what has been researched, if that information is available. And then we also have different value items like asset acreage and resources. So this is not exhaustive, but the point is that you can slice and dice this data in a lot of different ways. And of course, you're always able to reach our analysts and support team for specific methodology questions. Now, extending this analysis a little bit further, we can also look at specific operator portfolios. And so the example that I've taken here is ConocoPhillips, and specifically their LTO production profiles and their big 3 U.S. shale plays. So this really covers their activity historically and forecast in the Eagle Ford and the Bakken and the Permian Delaware. And in addition to the play selection, I have provided a little bit more asset level granularity. So what we essentially see is a production increase from next year in the 3 Eagle Ford assets with more or less stable Bakken production or slightly increasing, and some production growth in the Delaware in the midterm. I'll come back to this asset level example as part of the economic model and show you how to change some of these asset level drilling activity assumptions. This chart provides a similar selection in terms of net LTO production for ConocoPhillips for the big three shale plays. But I've included a little bit more specific scenario analysis here from 2018. So what we see essentially is the same high-level production profile as in the last slide under our base case scenario. But what you can also see is I've provided a low case production scenario. So we see in that case production potentially peaking in 2018 and gradually declining. And of course, conversely, we see different production scenarios and mid-case and high-case scenarios as well. Moving towards the economics profile, this is the economics profile aggregate for these three big plays, and what we see here is a contraction in drilling capital, which here is represented by exploration and well capex portions of the column in 2016. And of course, this was due in part to a contraction in activity, but also certain cyclicality elements and certain efficiency gains that played into this as well. And as activity picks up going forward, we see a pretty consistent increase in capex and operating expenditures. Another functionality I'd like to underline here is that you don't have to look at this in terms of aggregate spending. I mean, you can also look at this on a per dollars per BOE basis. So what I've done here is split the same economics outlook, but simply by different economics groups and economics categories, which are one level more granular. And this really gives a more detailed overview of the various cost elements. Finally, I briefly showed you in a couple slides back some of the asset level NPV and break-even figures. This is another functionality that I would like to expound on a little bit. This shows ConocoPhillips big three valuation, shale play valuation under different price scenarios, in total millions of US dollars. So on the far left, we see the NPV metric under our base case price scenario, and progressing from left to right, you can see how the valuation fluctuates if you plug in your own price assumptions. So this extends from left to right from about $55 a barrel to $85 a barrel. And so, you know, there are a lot of value items where you can plug in your own assumptions and see the outcome. Now, for the next part, I will focus specifically on the UCube economic model, which, as I mentioned earlier, is a relatively new feature under UCube Premium and was introduced earlier this year. Basically, the economic model allows for an entirely more granular layer of functionality for any combination of assets in UCube, really. It's Excel-based, so it's very transparent. You can see how the modeling is being done. It's also very flexible in terms of asset selection, so this can range from a single asset to, realistically speaking, let's say an operator's entire global portfolio or all the assets within a specific shale play. Of course, the export time will vary according to the number of assets that you choose, but there's really not a huge limit in terms of the amount of data you're able to export. The model displays not only the production and economic profiles that you see in UCube, but it also includes all of the underlying assumptions that ultimately affect these profiles, as well as the asset valuations, whether this is related to reference prices, inflation assumptions, various fiscal regime inputs, and so on and so forth. Another major distinguishing factor is that you can actually change these inputs and assumptions. So these assumptions which would otherwise be locked in UCube, you can replace this with your own assumptions or your own proprietary data. The interface is pretty straightforward, and I'll go through this process of exporting data step by step. So drawing further on this ConocoPhillips example, let's just say we want to select ConocoPhillips as the operator and select their 3 big shale plays in the U.S. And once you have that asset portfolio selected, you simply click on UCube Economic Model under Tools, and then you press Create to export all of this data and all of the underlying assumptions to an Excel template. So what your default page is going to look like is this summary page, which shows the aggregate net production and cash flow profiles at the top for the asset selections. Moving downward, we can see more specific information regarding life cycle and resources and different NPV metrics on an asset basis. So that's your default view. Now, as I mentioned, there are many elements that are customizable in this modeling system. So you'll see in the middle of this page the tabs that accompany the exports. In the tabs, the 4 tabs to the left of that, that's where you can really customize the underlying assumptions. So I'll go through these one by one. So at the far left, you see global parameters, which allows you to change discount rate. By default, it's at 10%, but you can change this in whichever direction you would like. You can choose one of various price scenarios that we have built into the system. And of course, you can also change your inflation assumptions, among other things, as well as the currency display. Moving to the right, under asset parameters, you can customize some of these inputs even on a more granular level. So this allows you to change, for one, the reference oil price that an asset might be associated with. For companies with a diverse global portfolio, this is also very useful because you can change the asset level discount rate here. So that's another functionality here. And then finally, moving over to the tax models tab, this displays all of the various fiscal regimes that are in play for your selected asset portfolio. So you can go in here and tweak the royalty rate for a particular tax model, or your production tax rate, for example. Say if 2 assets fall under one tax model and you would like to update those separately, you can also go into individual asset tabs and make those updates accordingly. So you don't have to necessarily just make a one big tax model update to see the effect. You can also change this on an asset-by-asset basis. And then finally, since we've been looking at shale analysis today, I would like to devote a little bit more time to the shale models tab, which this provides yet another layer of granularity to the economic model. So just to review, the production and economics profiles for shale assets are largely a function of 3 big things. First of all, it's your well parameters for horizontal wells. Second of all, it's your future drilling activity assumptions. And then third of all, it's your well economics, so your D&C costs, facility costs, and your different operating cost assumptions. And what the shale model allows users to do is to change each one of these assumptions for individual shale assets, both in terms of historical activity as well as future activity. So this system is fully color-coded. Basically anything that you see here in orange is data that's taken directly from UCube and which would otherwise be locked into the system if you were just interfacing with UCube. But in this case, under this format, you can make direct changes to any of the parameters that you see in orange. And you can see the resulting outputs for break-evens, production, and asset level economics, which are highlighted here in blue. So this is your default view under Shale Models tab, and I will go over some of the ways you can manipulate this data in a little bit more detail. So at the very top, you see various asset level parameters. On the left, you'll see the hydrocarbon split, which you can tweak, and that will change your future production modeling in terms of the hydrocarbon share. Moving on to the right, it's also possible to experiment with your spud to completion time and completion to startup time. If you, for example, are assuming that there's going to be a larger amount of drilled but uncompleted wells in a particular year or over a particular period. And finally, you can customize the acreage position for a particular asset along with well spacing. So this is your average number of acres per well. And these two factors together will determine the number of drilling locations, net drilling locations to that asset. Moving further on to some of the more specific well level inputs you can change. In the box on the top, I have highlighted 3 well parameters that you can manipulate historically and in the midterm. And these consist of your 24-hour production rate, initial production rate for horizontal wells, the initial decline rate, and the hyperbolic factor, which is essentially the decline rate at the long end of the tail of production. So together, these 3 factors determine the estimated ultimate recovery for wells completed in a certain year. And you can tweak these historically as well as experiment with your midterm well parameters going forward if you have certain assumptions about the efficiencies that might be implemented in the near term. And of course, these kinds of updates can have a pretty significant impact on your production profile, depending on what kind of drilling activity you have going forward. But they can also affect your asset level resources as well. So it's important to keep in mind just how much you can really tweak with a few changes. Directly under the specific well parameters, this section highlights the drilling and completion activity and startup activity assumptions. So basically, this is a time series display of the number of net wells spudded, completed, and started up for a particular asset. Like with any other parameter that I've underlined here, you can update this information historically if you have a different number that you want to test out. And you can update it in the midterm as well. Say if you see more bullish activity going forward to 2020, for example, then you can revise up the number of spudded wells, which I've underlined here in red, and then this will result in changes in the production profile and cash flow profile in the summary statistics page. And then the final default well parameters tab or aspect that you can change directly is related to asset level capital spending and operating costs. So essentially at the top of the table that I've circled here in red, you can adjust your average drilling and completion costs in a given year for an asset, as well as the facility costs that are related to that drilling. By default, we have $400,000 per well for facility costs, but this can be customized in any direction that the user would like. Under that, you can change your different operating cost components, so your SG&A, transportation, and lease operating expense, and this is on a US dollar per BOE basis. So I won't go into this asset by asset, but I do want to show you just as one last thing how this can affect the profile for asset portfolio. So going on this ConocoPhillips example that I exported earlier. Let's assume that you want to revise your midterm, just your midterm drilling plans, and you see a more bullish activity going forward. So, for example, some of the things we could assume here, and which I've changed, let's assume some kind of drilling reduction in the Bakken to 15 wells, about 15 net wells in 2018, with a gradual increase to 30 wells in 2020. In the Eagle Ford, let's assume a year-on-year drilling activity increase of about 15% for all Eagle Ford assets, by the way. And let's assume slightly more bullish year-on-year drilling assumptions for the Delaware, so anywhere between 30 and 50% from 2018 to 2020. And just by changing these drilling parameters alone, you can see a very evident change in the production profile with really bullish activity coming in 2020 and 2021. So we see a very clear change here, and some changes to the cash flow example as well. So this is just one example of what you can do. Of course, as I mentioned, you can change initial production rates and really any well parameter that you want to, or your economics parameters. But this is an overview of the detail you can go into with viewing this data. So, David, I think that is it for my part.
Okay, great. So thanks for listening in, and thanks, Thomas, for giving this fantastic overview of our E&P solutions. With this, we'll conclude today's webinar. You'll shortly receive a follow-up email with a link to the webinar recording and sign-up details to our free monthly newsletter publications. If you'd like a more in-depth product demonstration, please don't hesitate to contact us, and one of our sales team will be in touch. Once again, thanks for attending.